The following content is for informational purposes only. The views and opinions expressed by the hosts and guests are solely their own and do not necessarily reflect the views of Alia, its affiliates, or any organizations represented by the participants. Nothing discussed should be construed as financial, legal, or investment advice.
Welcome to Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving in markets. I'm your host, Stefano, Director of Institutional Services at Alea, and with me I have Sam MacPherson, co-founder and CEO at Phoenix Labs, the core development team behind Spark. Spark is the DeFi lending protocol within Sky ecosystem that enables users to supply assets, borrow the USDS stablecoin, and access on-chain liquidity markets. It functions as the capital markets layer of Sky, directing stablecoin liquidity across DeFi while aligning borrowing demand, yield generation, and protocol revenue. Sam, so great to have you with us. Thank you for coming on the show.
Yeah, thanks for having me.
Absolutely. This should be an interesting one. Um, we've been talking with you guys plenty of times. We've met a few times before, but please, for our audience, tell us a little bit about yourself and what you were doing before heading Spark.
Yeah, so I've been a serial entrepreneur most of my life, but I think the proper starting point is how I entered crypto. So I joined in the 2017 ICO cycle. At the time, just hobbyist investing. I think like a lot of people, market's going up, so you get excited and you like, what is this new thing? So I've been like a software engineer for all my life. That's kind of like my background before. But yeah, initially I was aware of Bitcoin like a while before that, but Ethereum was really the first one that like sparked my interest as like a software engineer. The ability to like make programmable smart contracts, programmable money, this type of thing really spoke to me. So I started investing and exploring the projects that were around at the time, and I discovered Maker back in 2018. Again, first just investing, and then just the next like 2 years, I was just like researching the project, becoming familiar with Ethereum, Maker, how it worked, stable coins. So I would say I was like a community member in that, like just posting every now and then in the forum, and I became increasingly active over the years. Um, I started actually developing smart contracts in 2020 and then joined the core engineering team at Maker professionally in 2021. So for there, I was working on the core protocol. And at this time, I don't know if you remember, but like the Maker Foundation was just dissolving and handing over control of the DAO to the actual DAO. And so Maker was actually operating as MakerDAO for between about 2021 to I would say about late 2022, like for real. We can maybe get into some of the issues that came up as operating as a DAO, but yeah, it was a great experience. I was able to learn the technical side. I learned a lot about how DAOs work on the governance side, and yeah, this culminated into launching Spark in mid 2023 as part of the endgame restructuring. There's kind of two things that happened at the time. Um, there was the rebrand into Sky, but also the restructuring of governance into this like core parent DAO and then like a sub-DAO system, of which Spark is one of the sub-DAOs.
Yeah, for sure. So it's been quite a ride since 2017, the ICO cycle, as you mentioned, but even everything since then, right? It really sounds like you came up through the ranks, as they say. Um, that experience from being there from the early days and being part of the DAO and the community, how did that shape your thinking to inform your decisions, the decisions that you're making right now?
Yeah, so I think there's two tracks of my thinking of what's been going on specifically in Maker. And one is that the core business, the core protocol of Maker, the DAI stablecoin, now USDS and Sky, has worked quite well. The protocol's generated revenue over the years. It's even been profitable for like pretty much the entirety of the protocol. So like fundamentally, there's product market fit, and like it's also growing. So like that's never been an issue. That's sort of like a business like business strategy. Like it's quite solid there. There's a second track, which is the governance, where I've learned a lot being inside the previous DAO structure and now the new iteration, which is this sub-DAO model. And having gone through the first iteration of the DAO structure, where I think like most protocols actually fall under this, where it's like you have one single DAO and there's like token voting and the plurality vote wins. Fundamentally believe this doesn't work. It doesn't scale. And I think we see tons of attempts at doing this. And so that has been the big lesson that came out of these days in working in MakerDAO. So will this new structure work? It's not clear yet. I think we haven't tested the sub-DAO model at scale. Um, but I think it's a much better structure than the previous attempt, and it might very well work.
Can you elaborate shortly on how that model works? Because I agree, that's definitely something that sets you guys apart and is very unique about the Sky ecosystem. At a high level, how does that operate?
Yeah, sure. So when it comes to governance, it's really like deciding what to do. So I think there's like two kinds of protocols we'll just focus on Ethereum, or really smart contracts in general. For finance, you really have like exchanges and then you have lending. And so for exchanges, they actually benefit from the ability to actually run like immutable, permissionless code. So Uniswap is the big example of this. It's a great example of what can be done with smart contracts and without the need for governance. And I think that's great. Lending, you don't have that because you have to always be underwriting the credit that you're issuing. This needs some sort of decision-making apparatus. And so in deciding what to do, there was this first iteration, which is, you know, absent any sort of like fundamental mechanism for identity, the only thing you can do is have like tokens that allow you to vote based on your token share. Um, and so then the decision making, like naturally you get into this like human level issues where there's politicking and potentially corruption and stuff like that. There's all this kind of like back channel stuff that starts materializing, and really the DAO structure is just kind of a facade of what's actually going on behind the scenes. And so the sub-DAO model attempts to address this by removing all the decision making from the core protocol. You basically, in terms of lending, the core protocol just becomes like a wholesale credit vehicle for the sub-DAOs. And so the sub-DAOs are where all the decision making. A good analogy, like I want to say these things are not banks, but I think it's a good analogy. The Sky becomes more like a central bank where it's just providing liquidity to the commercial banks. And so the commercial banks are, Sky, Grove, and the other sub-DAOs, and they're able to make decisions and actually interface with the on the commercial side of things. So this structure is decentralized in theory on the whole, because the core protocols just basically setting the risk framework that the other the sub DAOs have to follow. The sub DAOs are making the decision making, but it's kept in check by free market pressures. So sub DAOs that are making good decisions are rewarded in the free market by growing and becoming, and prospering because they get more returns. If there's sub DAOs that are not able to compete, maybe something's gone horribly wrong. That's perfectly okay. They're allowed to die. They're allowed to underperform. They'll just, wither away and be taken out by competition. And so, as the whole, this system remains decentralized in the same way that the free market is decentralized.
That's very insightful, and that's a great analogy, and that makes a lot of sense. Let's zoom in on Spark then. What specific role is Spark taking in this ecosystem, in this chain? And how does it generate returns, and how do you manage your risks?
Yeah. So, as I said, there are multiple sub DAOs. Where Spark is focused on is more like the deep DeFi side of things, mainly surrounding crypto lending. We've also recently expanded more out into off-chain lending. This is like OTC crypto lending, as well as we just recently announced a CDFI product, which does margin lending across positions in centralized exchanges, as well as DeFi. But really, yeah, it's all surrounding crypto lending. There's another sub-DAO that is focused on real-world assets. Actually, a few others that are more focused on the real-world assets side. So this is interfacing with TradFi. And so, yeah, there are like two of those right now, and there'll probably be more in all venues. But this is Spark's focus is crypto lending, and primarily in deep DeFi.
Got it. And how is it, for example, different from other well-known lending protocols like an Euler um, or Aave, right? Um, and and again, how does a lending protocol typically generate returns?
Yeah. So first, actually, I want to differentiate these because to me there are two layers. There's the infrastructure layer, and this is like a Morpho competes solely on the infrastructure level. This is same with Euler, and Aave also competes on this vector by their Aave market. Um, but Aave also actually competes on the curator side. So with Euler and Morpho, you get a detachment of these two, like the infrastructure and like the curator, which is like provisioning the liquidity into various markets. So Spark is a curator. Spark does not compete directly with Morpho or Euler or Aave as like an infrastructure provider. Where Spark competes is at the curation side. And so you could think of Spark, I think the terminology that is kind of taken hold is called vaults. And so Spark is like like is able to deploy liquidity in all of these venues, including Morpho, Aave. We have an internal lending market called Sparkland. So we're pretty agnostic about the actual lending infrastructure. Um, and yeah, that's sort of how I see the ecosystem.
Got it. That's very clarifying. All right. What are your main or most relevant counterparties, and how do you manage those relationships?
Yeah, so most relevant counterparties. We deal actually increasingly directly with the borrowers. I'd say historically, we've done lending through other venues. So a good example of this is we still do lending through Maple, and Maple has more, and this is like OTC crypto lending. And Maple has the relationship with the borrowers off chain. We still go through this venue, but increasingly, we are actually directly lending to the borrowers. So one new uh, business line that we've integrated recently is called Spark Institutional Lending. So this is OTC crypto lending through Anchorage. Anchorage is a qualified custodian. And so through a tri-party lending agreement, we're able to uh, put the stablecoins into Anchorage. Anchorage will custody both the stablecoins and the collateral, which is primarily Bitcoin. And then it will execute the loan such that Anchorage is custodying is custodying the collateral and will perform liquidations, all these kinds of things if the rate or if the price of Bitcoin drops too much, and then the end borrower is able to take that loan. Um, yeah, so that I mean that's one of the counterparties. We're also Sky is a counterparty. We borrow from Sky, and having access to Sky's and now recently passed 10 billion in liquidity is a significant advantage in the space, and this is why Spark is able to grow so quickly into a top DeFi protocol. But actually, Spark also has its own vault products as well. We now have Spark Savings USDC and USDT to be able to get deposits more directly into the protocol, as well as we interface with a protocol. This is a new product that we've launched called Spark Prime, which I was talking about a little bit before. So Arcus is another counterparty where they have a very advanced margin technology that can margin across centralized venues, CeFi, as well as DeFi venues, and able to uh, it- massively improve the capital efficiency of the lending that we can do. And again, like we're interfacing a lot directly with the borrowers, and so I think that's kind of the future. It's having a very direct connection with a lot of the borrowers in the space.
Interesting. These end borrowers, what do they typically look like? Are those traditional traditional finance market players? Are they maybe liquid funds or crypto native type firms? Are they just maybe like individuals? What does that profile look like? Maybe it's a mix.
Yeah, so it's almost all institutional, and these would be crypto native firms. I would say the vast majority is hedge funds that are just getting yield on the entire DeFi ecosystem. Um, yeah, so these are primarily the borrowers that exist in DeFi lending markets today. Um, we're just there's just a big capital inefficiency with these markets, but specifically with the inability to margin across, say, positions that are in centralized exchanges. So, I mean, this is why we're very excited about this new product, Spark Prime, which is able to increase the capital efficiency drastically. But yeah, primarily our it is hedge funds we're dealing with.
Can you talk a little bit more about Prime?
Yeah, sure. So Spark Prime is a product that we're just scaling right now. There's a few like technical pieces that still need to be in place before we could really step on the gas. So we're kind of in a beta phase, but we've seen demand for this is basically every like hedge fund in the space is like wanting to get into this because it's a step change in the amount of capital they can get access to. And the reason for this is because right now, I think it's clear to everybody that stablecoins are the big product market fit in crypto. And so this chart is just going up and to the right. Even during the bearish period we've been in, the stablecoin market cap actually hasn't even gone down. Like it's just like stalled. So and so what this means is there's just a huge amount of liquidity that is searching for yield on chain. And so us as a fractional reserve stablecoin, or at least deploying the fractional reserve stablecoin that is USDS, we've been searching for scalable yield sources. So historically, that's been crypto over collateralized lending, CDPs. This is how Maker came into being with, lock up your ETH and then you can take a loan against it. It's all on chain. So this is still like a good chunk of the amount of revenue that goes into the protocol. But other scalable yield sources are treasury bills is kind of the baseline. It's nice that we have these in tokenized form. But more recently, it's been access to the perpetual futures funding rates, which have been has been growing quite rapidly. This is like another like very big emerging industry, which is perps. And so everybody's wanting to go lever long, right? Like it's if you're in crypto, you want 100x leverage on Bitcoin. Well, who's the liquid? There needs to be liquidity on the other side. So who's taking the short side? It's these delta neutral hedge funds, a lot of them. And so the first iteration we saw of this was with like just a tokenized hedge fund. Athena being a big example here, where you're basically delivering a unsecured loan into equity, which is not particularly a good structure as you as the lender. Like so, where we're wanting to go is we want more recourse and say over like the risk management of these hedge funds. And so, Spark Prime is the natural evolution of this. So it's going to be that Spark is able to still tap into this funding rate yield, but it's going to be able to do it in a much more reliable and safe way because the collateral does not just sit with the borrower, the collateral is sitting with an intermediary. And so if there's some sort of loss event, you're no longer just completely reliant on the borrower able to repay. You have recourse on them. You can liquidate their positions. And so this is just a much more robust way to access the funding rates, and actually, in general, all yield in DeFi and CeFi.
That's fascinating. When you said it's still in development, can you say anything about a possible when will we learn more, or when can we access it or try it?
Yeah, so it's live right now. There is we have a data dashboard. You can see Spark Prime is listed as one of the assets that is Spark is deployed into. It's at 10 million right now, so it's a small number. So the technology is mostly there. There's like some final pieces that need to be put in place. Um, but yeah, it's really just a lot of like the data collection and sort of like Sky having visibility into what exactly where the loans are going, so that it can properly assess the risk capital that is required from Spark. Okay, I didn't really mention this, but one of the uh, one of the important pieces of being a sub-DAO and choosing where to invest, is Sky won't tell you yes or no. But what they will do is they'll be underwriting the junior capital that Spark needs to put up, in order for that. Spark has skin in the game. Spark takes first loss if there's some sort of loss event, and that's extremely important for aligning incentives. So in order to get these risk capital requirements down and sort of more reasonable, Sky has to have high confidence of that, that the system works and it's scalable. And so this is just an ongoing process of getting everybody comfortable. Yeah, on the technical side, it's in production now, and as I mentioned, basically every major hedge fund is clamoring to get in here because it's a huge competitive advantage for them.
Absolutely. All right, that's very insightful also about the process. Um, and Okay, it's like you guys are doing a lot. That's very clear, and it seems like nothing is beyond you guys. Let's say, but to flip it around, maybe what are some constraints or frictions that you simply have to operate under, and that you need to manage, that restrain your maneuverability, your possibilities, and yeah, that you need to account for.
Yeah, so as I mentioned, one big constraint is the Sky Risk framework. So the sub-DAOs are free to operate, within this framework. But so the goal of this framework is basically to approach like a banking style Basel III risk framework, where you know any sort of proposal, you are doing the analysis on the number of fronts, like market risk, counterparty risk, like all these types of different risks are basically compiled into a couple of numbers. So risk capital being one of them. As I mentioned, this is the amount of the first loss capital that the sub-DAO needs to put up to take first loss. There's also like debt ceilings, the amount of like concentration risk you want with a particular deployment. Um, this analysis is not always super trivial, but this is important to have like a robust system in place, so that the core product, which is the USDS stablecoin, can remain stable and reliable. Um, the other piece I would say is governance. So this is still a DAO structure, even at Spark's level. So the SPK token holders are the ultimate authority on all the decision making. And so this process can be cumbersome compared to centralized counterparties that can just react like within a day. Like our turnaround time, even like for a fast path, is often around a month. Like things move slowly, but this is intentional. Like the position of, I would say, any sub-DAO within the Sky ecosystem is not to be reacting, much like a hedge fund would, but instead providing liquidity to hedge funds. We want to sit more at this like intermediate layer where we're providing liquidity at scale in a robust and safe way, and then you leave it to the hedge funds to hyper optimize and react to the market conditions and get the best possible return.
Absolutely. You just operate on a different time frame. That's clear. Um, what are some practices that you guys do not engage in that would be perfectly viable, but maybe you just don't choose them for strategic reasons, or they don't fit your philosophy, things of that nature?
Yeah, I would say the biggest one from the very beginning, and this is counter to almost every crypto project in the space, is that we are not focused on token marketing. Like we are, I would say 95% focused on growing the core product. And this is a decision that's, I think in bull markets, actually, sometimes you question a little bit, but I've been through a few of these cycles, and time again, it's proven to be correct, where just focus on the compounding core metrics of the protocol. I think we've gone through, I think the token marketing was quite effective ICO and even 2021 cycles, but we're getting like a diminishing returns. You look at the uh, tops of like altcoins within this like previous cycle, and like a lot of them haven't even passed their previous all-time highs. And I think the fundamental mechanism there is it's like a transfer of value from retail buyers into the protocol to be used however people want. And retail just will get increasingly exhausted with putting their money into tokens that don't have a sustainable business model. So yeah, I would say this is the biggest sort of differentiation we have at Spark.
It's very interesting. It feels sometimes to me as if in this industry we've put the the cart before the horse, in the sense that uh, in normal markets, the value of a company should follow its productivity, its revenue, the product it brings out. And here it seems like we're chasing just like valuations and higher token prices, but as an end to itself, right? And that just becomes counterproductive, because then where does the value come from? Anyway, bit of a tangent there, but yeah, it's good to see, I guess, that you guys are focused on the thing that matters and where value ultimately comes from, right? By focusing on the product.
Yeah, for sure. And actually, just one little point. I just want to be very clear. In my view, the token should have a value accrual mechanism from the revenue streams of the business. So it's not like we ignore the token, but it's like it's the proper order where you grow the core business and then there's a value accrual mechanism so that there is like a link to the token. It's more just like about uh like yeah, as you say, putting the cart before the horse and just focusing on having a high token valuation before there's actually business fundamentals.
Absolutely. What are some, th- as you said, this one pattern that we see in this industry, right? You surely in your position and working at Spark, you must have a unique viewpoint. You have access, you see data or patterns that others might not see, simply as a consequence of your decision and your position and theirs, right? So what are some of those patterns that you see that others might not?
Yeah, I think data has been kind of difficult to surface. This space is so new and so complicated, and there's lots of new terms. So I find like there's like like I don't even blame the companies that are doing like data surfacing. Like I think they're doing as good a job as they can, but it's just like it's so complex for investors to like go deep on this stuff. Like we are extremely deep, so we understand like what like the metrics that matter the most. And I don't think there's this like it's like maybe one step removed with what sort of the metrics that are being presented as like the most valuable to potential investors in the space. TVL is a good example of this. I think there's an overemphasis on TVL. Like I think it's useful, but it's not like the be all and end all of what which protocol is which is going to be successful or has like a good fundamentals. And it's often like um, as protocols get more intertwined, who the TVL is attributed to is sort of like just you pick and like it's like a subjective choice. So like Spark lending into Morpho, and Morpho are partners. We love those guys. They're doing great. We do lending. Like we were actually most of their TVL like initially when they launched the protocol, and it's a great protocol. We're using it, but like we're reaping almost all of the benefit from using this as the lender. But the TVL numbers for Morpho go extremely high, and so like does this measure like where the value actually is? I'd say it's not a useless metric, but I think we need to get more comprehensive with how these metrics work.
That's an interesting insight in itself, actually, to basically you know preach caution about, because you're right, people do jump to conclusions based off simple metrics, or they simplify things. I fully agree. Um, what's another maybe commonly held view that that people in the industry have a lot, or that you see a lot, and that you think is incomplete?
Yeah, I would say the other big one that I've increasingly come to think is true is that dual token models for growing a business do not work. And so, and to explain a little bit what this is. So this is where you have some core product, and actually I'll use a stablecoin as an example. So you have a stablecoin, and deposits into that stablecoin are your primary KPI. So a lot of projects, what they'll do is it depends on the degree, but they'll use the governance token or the token associated with like more on the equity side to uh, grow grow the product. And so, while I think this works like at a marginal level, you can kind of like uh, boost your KPIs a bit. You can't lean on this like too much. If you start doing this at scale, it leads to just this huge value extraction where the LPs into the protocol will basically just be a vacuum for the retail money that is buying the token on the other side. And so I think that maybe a general rule of thumb is like maybe you can kind of support growth at a smaller scale, but if you start having like 50% of your at scale stable coins supported by the token, it's just going to be a huge value leakage overall that it's going to result in the whole project collapsing every single time.
Interesting. It's definitely, yeah. That's one I hadn't heard before. There are a few of these models out there. Uh, okay, that's interesting. Moving on a little bit. At the start, you mentioned you've been around since 2017. That's quite some time. That's nearing on 10 years, which is in this industry particularly. Yeah, we could say you're a veteran for sure. What in that time, um, what have been events or phases that stand out to you as being the most formative um, in you as a operator in this space, right? So by that I mean, what were formative phases or decisions that you or lessons that you took that really shape your decision making uh, nowadays?
Yeah, I mean, honestly, I don't think I can point to one particular thing. It's like always just an ongoing process. I would say when I first joined, like I don't even recognize my thought processes. The psychology of crypto is so interesting. I was along, everybody else just like buying random tokens that like, oh, this like at face value, this seems like it's the future or something like that, right? Like the Denta coin, or I didn't buy Denta, but like things like that, right? You just buy random stuff, and then you're like, you kind of convince yourself that it is the future. Um, so that sort of self, I don't really recognize anymore. My thinking has gotten a lot more critical over the years, and just sort of like probably like everybody else, just coming down to reality where no, we haven't invented magical things that can like solve finance or something like that, and like just invent money out of nowhere. Like these things are more of like like a extension of the things that already exist within finance, and largely this it's markets that are driving everything, and like we know how these behave. So I would say, yeah, first joining in Maker, my background is not in like finance or anything. So I came in through purely technical lens. So I was just building all these things that I thought was cool and learning over the years actually how these map onto traditional uh, finance mechanism. So good example of this. One of the first things actually, a little fun fact is one of the first things that I built at Maker was the what's called the peg stability module, or the PSM. This contract is actually one of the largest holders of USDC on Ethereum. I think it might be under Hyperliquid, but it's like one of the largest pools of USDC on chain. And so with this contract, it was swap contract. It allows you to mint DAI at the time, and then so you can deposit USDC and then mint DAI 1 to 1, and then you can do the reverse and exit. And so all of this stuff at the time, I didn't really understand. I mean, we knew we needed to achieve some objective of getting the DAI price down to $1, but actually what this is building is like a primary redemption mechanism for the stablecoin. And so, yeah, like again, I could probably go through a number of these examples, but just realizations all the time. And I think a lot of a big thing I've learned over the years is that TradFi really wants to get involved in crypto, but there's like there's new words for everything, and all these things, most of them exist in TradFi, but we just have a completely different language set, and bridging that has been a learn. Like I'm coming from the DeFi side and learning the TradFi terms, so it's been really helpful to interface more with TradFi people and build like this one-to-one mapping of how these things connect.
After this conversation, it's fascinating to hear that you had like no background in finance, and that's all just like accumulated knowledge from like the since entering this space. Uh, and it does seem sometime, yes, like we're kind of reinventing the wheel sometimes and coming up with new primitives on chain. And then yeah, it's basically a copy of what already exists in traditional markets. Um, and I definitely remember the time when I joined, that was like 22, so that was like the tail end of the bull market, and people were definitely like in a mania and thinking that, this is going to be the end of traditional finance and it's going to be the end of world poverty, et cetera, et cetera, et cetera. And then, yeah, in the bear markets, people do come down a little bit, and maybe that's a good thing and have a more of a sense of realism, right, and practicalism. So, all right, that's looking at the past and taking the lessons from that. Looking at the future, what are what are developments that you are looking out for, specifically that you're trying to keep an eye on because they very well might steer the direction of of Spark.
Yeah, I would say one of the biggest is like the macro environment. The world is becoming more unstable
Yeah,
in general. Where the world we've been living in, I would say up until recently, is like the USA is the global hegemony, and now it appears that's being challenged. And so, in like, I don't know where the cause, if it's causation, like, there's definitely this correlation with the U.S. dollar losing its position as the world reserve currency. And so, especially with the recent like directions of the government seems unable to get its spending under control. I like aside from some sort of monumentous change, and I think inflation is a very real concern with the U.S. dollar, and so we're kind of watching this and how rapidly. I'm kind of like, I don't think this is happening next year or anything like that, but maybe over a decade or two, the U.S. dollar it could be really threatened as in its position. And so, if you're pegged to the U.S. dollar, you need to have this kind of concerns. And when is it? Do you need to start thinking about potentially depegging, free floating, maybe pegging to something else? Like these are fairly long decisions, but it's something you kind of need to always be thinking about as we enter this new world.
absolutely. Are we going to see EURS anytime soon or something like that? Maybe.
Oh yeah, for sure. But that'll be like a separate stable coin. Like yeah, the USDS is pegged to the US dollar for the foreseeable future.
Very good. All right. All right. So that's long term and that's insightful. And that, of course, that makes a ton of sense, of course, for your business. And I fully agree. It does seem like the world is destabilizing. Um, Short term, what's definitely on the horizon for you guys? You already talked about Prime a little bit, but are there any other interesting developments, announcements that will be made soon, that are on the horizon? Let's say the next few months.
Yeah, so Spark Prime is probably our biggest focus. We think that's going to, scale up to many billions and be like one of the most dominant forms of on-chain lending in the very near future. But in addition, we rolled out a new product called Spark Savings, like the version 2 of this, in November of last year, or October, I guess. And we've really started scaling this up. So previously, USDS, which takes deposits in from USDC, it can largely be considered like the largest on-chain yield on top of USDC at over 10 billion now. But historically, Sky has been neglecting the USDT market, and so we've been rapidly growing our Spark Savings USDT product, which just a yield on top of USDT. And so we've been able to deliver. Currently, it is about 3.4% APY. This is significantly better than the going rates from the market. It's about 150 bips higher than the lending markets right now. And so how are like this is not just subsidies. We're actually able to deliver a fundamentally better yield at scale due to the integrations with real world assets, which can complement, especially in bear markets, the lower rates that come from crypto lending. So the savings product is now at 350 million. It's grown by 200 million in the past month. And so we think it will grow past a billion very shortly. And it's just due to the risk profile is quite good. This is crypto lending, pretty vanilla, like RWAs, like T-bills, some degree of CLOs, AAA CLOs. It's the same as the USDS backing, but the yield is quite better. Is quite a bit better than the competition.
That's exciting. All right. It's seems like you guys have a lot going on, and it's an exciting time for you guys. Where can people go to learn more about this or start trying things out?
Yeah, so I mean, a lot of what we do is institutional. You can go to the Spark.fi website and just view a lot of the stats about how Spark is growing with institutions. If you're wanting to engage with the products, I'd say like the yield product is the most accessible. What I mentioned, Spark Savings USDT. We have one for USDC as well as USDS. So it's just whatever asset, whatever stablecoin you're holding, you can deposit it there and earn what we consider to be the best risk-adjusted yield in the space. As well as, yeah, I mean, if you want to follow me on X, I tweet. I haven't as much recently, but I try to tweet my thoughts about this stuff as much as I can. So, yeah.
Absolutely. All right. Thank you for coming on the show and sharing that. It was pretty insightful conversation. It went in a lot of directions, which yeah, makes sense given your background, what you were doing before, how you came into the space, right? And really developing also through that time, the financial background now as well. Um, Lots of exciting things going on for Spark. That's clear. Thanks for coming on.
Yeah, thanks for having me.
Absolutely. To our audience, we hope you enjoyed it as well. This was Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving the markets. See you on the next Market Cap.
If you enjoyed this episode, you can find more of our research in the following ways. For in-depth reports, many publicly accessible, join our research platform. For protocol and market summaries and highlights, subscribe to our newsletter. And for our next episode, follow us on X and YouTube. All links in our bio.